Hello, everyone, and welcome to another episode of The Pragmatic Investor. My guest today is Ben from More Crypto Online. He's a fellow Elliott Wave theorist and a YouTuber. So, today we got the chance to go in depth about Elliott Wave theory. I got to ask Ben why he prefers this method over other forms of technical analysis, how he uses it to find good investments in the crypto world, what he thinks about cryptocurrencies like Bitcoin and Ethereum, and also how he feels about the altcoins, where he thinks we are in the current Bitcoin cycle, his more immediate outlook on various cryptocurrencies, and even his outlook on more general investments. I really enjoyed this conversation with Ben because, it's not often that you get to really talk in depth with someone that knows so much about Elliott Wave theory and investing and trading in general. If you haven't already, please go ahead and check out his YouTube channel. It's filled with incredibly good videos on Elliott Wave theory and Bitcoin. He puts content out every day, and it's a great channel. And if you haven't already, please go ahead and like and subscribe if you'd like to stay updated with the latest episodes of the podcast. So without further ado, here's my conversation with Ben. As always, I hope you enjoy this conversation as much as I did. All right, I'm here today with Ben from More Crypto Online. Ben, thanks for coming on the show.
Yeah, thanks for having me.
All right, so here's my first question. Now, a lot of people don't really, even those that do technical analysis, don't really know too much about Elliott Wave theory. I'd say that maybe it's one of the lesser known forms of technical analysis. And this is, of course, what you specialize on, Elliott Wave theory and applied to crypto. So first of all, what is it about Elliott Wave theory that attracted you? How did you get started, and why do you like this form of technical analysis?
Yeah, I think Elliott Wave it's for some reason it's especially popular in crypto. I don't know why. I think it's obviously a difficult, let's say a difficult form of TA to master and to really to really get, to really learn it. It takes a long time. So a lot of people I think just mainly know about, like, trend lines and the basic forms of TA, like head and shoulders pattern and all this stuff. Because this is, I think, more easy to learn, and but overall, I started my, you could say, trading journey or analysis journey when I was 18, so I'm now 35, so it's been a while. But over time, initially I just sort of jumped in, I opened my first stock portfolio, and sort of it obviously collapsed. I bought bank stocks in 2018, I think it was. No, not 2018, 2008. So yeah, that was very much in the beginning, and I had no clue about TA and anything. So yeah, but I blew my portfolio. It was not much, but obviously I didn't really have I only had a part-time job back then, was still studying. So it still hurt, but it was overall not too much money, which I was really lucky about. But that sort of, I think the problem then is many people who sort of lose in the stock market or make mistakes. And I think on your journey, I think everybody's on this kind of journey. Everybody who wants to, operate and act in financial markets. Most people, most traders, actually, at some point they will blow a portfolio. And sometimes that pain that you need to feel initially to understand that you need to deal with risk management, and that's where Elliott Wave comes in. I was really looking for risk management tools, and you find a lot of generic stuff, but Elliott Wave, in my opinion, the discipline or the main characteristic of Elliott Wave is that it's a great risk management tool, and many people don't understand that. I think a lot of people are looking for the crystal ball, which it of course is not. It has predictive qualities, but I think they are second to the qualities of Elliott Wave as a risk management tool. So that's what it's really good at, because it tells you, even though Elliott Wave counts, it takes a lot of experience to do them properly, because it's more than just counting 5 waves up and 3 waves down, because that's what it is. It's essentially Elliott Wave. You can determine where a trend is, or in which direction the trend is moving, by basically counting, in very simple terms, 5 waves in one direction. So if I can count 5 waves to the upside, I have a first indication that an uptrend is going. Now there's much more to it, of course. And then if you get a 3-wave pullback, which forms a higher low, you basically have the second confirmation. Now, for that pullback, you can define a support area. And if that is broken, it basically tells you, no, it's not an uptrend. You continue with a downtrend. And knowing these key levels that you determined with Fibonacci levels, which are objective, that's objective, the objective element of Elliott wave, that gives you a very clear level where, for example, you could set your stop loss. And if you can manage to get into a position very close to that stop loss, or very close to that invalidation point, you have a really great risk management tool, because you risk very little. It doesn't hurt when the trend breaks or when your stop loss triggers. And that's the main aspect why I really like Elliott wave, especially in crypto, because honestly, cryptos, there's so many, and I don't know if it's YouTube or a lot of influencers who cause this, but a lot of people go in there with the mentality you can get rich overnight. Whereas the first thing that people should focus on is risk management and to preserve their capital, especially in crypto, because it's so volatile. And Elliott wave helps with that. And then, of course, on top of that, which comes, I think it's the other advantage, is the predictive qualities, because it gives you a roadmap. But again, it's all probability. So it's not you only get one roadmap, it gives you 2 or 3. And that's the work of the analyst to identify the 2 or 3 main scenarios, which are all likely, but all of these scenarios give you certain levels against which you can trade, right? And then on different time frames, I mean, nobody needs to trade on the smallest time frames, right? You can just trade the weekly chart, and that's basically investing, you could say. And then but it's a great risk management tool, and has probably better, you could say, predictive powers than many other tools that I know, because it gives you that roadmap. You always get that. I always like that understanding where you are actually in the cycle of an asset.
Yeah, absolutely. I find myself agreeing with you quite a bit. Definitely one of the key points of value wave theory. It's very easy in a way to determine those invalidation points, those kind of key support areas where you would expect a reversal, or where you might want to cut your losses because it kind of changes the count. I think your trading journey, kind of like you say, a lot of people go through the same. It's all a learning process. I think making mistakes is part of it, right? I guess the key is to not make too big mistakes at the beginning.
Yeah, exactly. That's why I usually also in our MCO community, I always try to point out, please, before you trade anyway, make sure you understand the analysis, understand the thoughts behind it, and understand risk management. That's really key, because if you've lost all your money, you can't trade anymore. You've just taken away what you trade with. So that has to be priority.
Right, absolutely. And in terms of the crypto community, I mean, I guess there's an element there of self-selection, right? I think obviously a lot of people are drawn into the crypto community because of the potential for big gains. So, there's obviously a lot of people expecting that, and obviously, well, where there's big gains, there's also potential for big losses, right?
Yeah, and I guess a lot of people come into the space because there is a lot of volatility, and there is among Bitcoin, but more so a lot of altcoins now, especially now in the bear market, especially. Well, I'm not sure if Bitcoin is still in the bear market and ETH, but certainly a lot of altcoins are. So you've seen less and less of that volatility, and most of these spikes that we've seen, they've just been corrective rallies. And that's especially where also Elliott wave, I think, comes in, because it allows us to understand when the trend has really changed. And I'd rather be in a little late in an uptrend than going into early and then it all breaks down again. So I think, again, here risk management comes into place. And to be honest, where you said there are a lot of gains to be made, but a lot of losses as well. But then if you understand exactly what I highlighted in the beginning, that sort of process that you try to identify those, we call them 1-2 setups, because the first 5-wave move up is a wave 1. The first pullback then in 3 waves is a wave 2. So that's typically the best setup to trade, because you get the best reward to risk ratio. Absolutely. And I think especially with altcoins, when people get into this space, I think first, especially because you can lose a lot, to get familiar with it, you just keep your position sizes small. But then as if you can be patient and you wait for those good setups, even though they of course can break, and that's what altcoins sometimes do, because they are also more correlated to Bitcoin. So they're fluctuating a lot, and setups do break. That's just what they do. But I think the key is not to try to trade for win rate these altcoins, but to trade for reward and risk. And if you can really wait for these deep pullbacks after a first uptrend, after the first impulse, we call it, first 5-wave move, and you have the patience to wait for these very deep pullbacks, then you can try to trade for reward and risk. And even if you fail, even if 50%, even if 60% of your trades fail, the few ones that are going to make it, especially in the altcoin sector, when you trade for reward and risk, I mean, they will be very rewarding. Because I mean, we're talking sometimes you talk about, okay, maybe you're risking $2, $3 where you set your stop loss, depending on where you set it, but you could make, if it, if it really starts a third wave rally, which is the most aggressive wave, the most aggressive trend, I mean, you could make $100, $200, right, with one, even though you only risk $2 or $3, just to give an example. So that's, I think, what a lot of people need to understand. It's not necessarily about win rate. It's about having patience, waiting for those good setups, because a lot of setups are not good, and most of the price action we see doesn't really demand any action, but still everybody tries to jump on. A lot of day traders try to trade everything, which is not the right way to do. You need to have patience and really wait for quality setups.
Right, absolutely. I think if you manage your risk properly, at the end of the day, it only takes a win rate of about 55%, right, to be a successful trader if you're really managing that risk properly.
Yeah, and sometimes even less. I mean, you don't even need, if you have a reward if you're trading for reward and risk of a 3-to-1 reward to risk ratio, you don't even need 50%, to be honest. Right. Even though it's good to have more than 50, absolutely, but yeah, you don't need it. I think that's when people understand that, that's very reassuring, because a lot of people put a lot of pressure on them, try to win every trade, but that's not possible, right? And I think it's much easier to focus on what you can control, which is your entries and your exits and where your stop loss sits, and you just let it run and see what happens, instead of just trying to worry about, okay, is it going to hold, and what do I do? So sometimes it's just better to maybe relax a little bit and just trade for reward and risk. And if the trade breaks, it doesn't matter so much if you've got your position sizing correctly, you're positioning close to the stop most of your position size, and so you risk little, but you can earn a lot, really.
So let me ask you this: when did you start trading crypto, and why?
So I've been, as I said, so when I was 18, probably, I really started getting generally into the markets. Looked at stocks a lot, mostly stocks and shares, and then a little bit of Forex. I think it was before the 2017 bull run that I can't remember if it was 2016 or 2015, but some work colleagues back then sort of introduced me actually to it. And because I was very interested in financial market anyway, and I was trading on the side, sort of part-time, it was of course interesting to me. First of all, I thought it looks a bit like a bubble. Didn't understand it initially, but when I really read about Bitcoin, what it was, and I saw, like many others, the potential for it. So I got more and more interesting, and I think I really got into it in 2016, I would say. But then didn't really trade. I just observed, and then I think it was after. I tracked it. I think I made a few small trades, and I think I took some profits 2017 in the bull run, but not enough. And it was a little bit of a bubble back then, but obviously Bitcoin recovered. And after that sort of blow off top in I think it was 2017, right, or end of 2017, that sort of bull run that we had back then. After that, I really saw my opportunity in a bear market to accumulate, but not only Bitcoin. I looked at other coins as well. For example, I was kind of lucky, you could say, but then is it luck? I mean, I really focused on that market. So I bought ADA, for example, very, very early. So I was kind of lucky. That's why it's actually still one of my biggest holdings, even though today, I mean, I would not accumulate all of these altcoins. But if you're very early, that's the point. You make a lot with little in the altcoin market. That's all sort of my motto. So that's why I was quite lucky, because I was really early. But yeah, sort of after the blow off top, I really started trading crypto.
So what is it about crypto then? Is it just a matter of good potential for trading, or do you also have some more fundamental beliefs? Like, do you kind of believe in the idea of Bitcoin and its utility?
Yeah, I mean, for me, it's, I think, mainly, so first of all, I find it interesting because it's sort of a little bit of the tech behind it sort of interests me. I mean, I always like innovation. I like new developments, and I like the whole concept of blockchain, decentralization, even though most projects these days aren't really decentralized, but
Right.
obviously Bitcoin is. And ETH obviously came after that, which I'm also very interested in. But yeah, it's sort of the whole idea of maybe having a different portfolio asset class. So obviously, also when we talk about generally a portfolio of different asset classes, I think Bitcoin fits in there very nicely because it's something new. And I don't see it like gold, but it's still, I see it sort of as maybe digital gold, but it's something that is allowing obviously transfers of, I mean, it's not money, right? But it's transfers of coins without any person in between. So you can just transfer something to someone without a bank in between, without any sort of service provider in between. And I think that, you know, I'm observing the geopolitical situation. I'm quite worried about what's going on in the world these days. So I think it's worth, from a fundamental point of view, maybe as some kind of security where if really things kick off, I mean, I don't know what happens with the cash market, the USD at some point. I mean, that's obviously worst case scenario, but I'm not sure how helpful gold would be in that scenario. But I think Bitcoin might be, because you can always take it with you. You don't want to take your gold coins over a border with you, but with Bitcoin you can. It's just a digital, isn't it? So I think from a fundamental point of view, I see it as some kind of a innovative technology, which is obviously mathematically limited. So it's the limitation behind it, which is interesting as well. And yeah, it's just it's a phenomenon. I think that's why it's so interesting. And I'm not sure if any altcoin will ever be able to overtake, well, maybe, never say never, but it sort of has proven itself over the years. And it's one of the few cryptocurrencies that has stood the test of time, really. The only other one is ETH, maybe BNB, but then there aren't many others because most altcoins have been outperformed by Bitcoin. And so generally about crypto, yeah, it's that idea about centralization, but also from a trading point of view, obviously the volatility, it's one of the most volatile markets. So it's certainly interesting for swing trades, absolutely.
Yeah, that makes a lot of sense. I mean, to me, I think Bitcoin, we can make the case now that it definitely can act in that kind of way of digital gold. Now, the last few months, especially, it's become quite clear that a lot of these altcoins, maybe kind of they got obviously all of these altcoins did very well during those 0% interest rate environments and all the QE. Now, it seems like a lot of the froth is kind of being cleared off the top. Bitcoin obviously has been outperforming. How do you feel about it? Like, how do you feel about Ethereum? Is that one that you like long term? Let's say a bit like Bitcoin.
Yeah, I mean, I'm analyzing from an Elliott wave point of view, ETH versus BTC. So I'm analyzing the ETH BTC pair. So which one is going to outperform which one. The chart isn't entirely clear, but it sort of hints at potentially a bright future of ETH compared to Bitcoin. So ETH, I think, is the only, maybe with BNB as well, but that's the exception. So ETH is one of the only altcoins that is really, I mean, I'm not sure if I should even call it an altcoin because it's sort of its own thing. But it's sort of, the only one that has really at least partially outperformed Bitcoin on the larger time frame. On most altcoin charts, you see that in the bull run, you get these weird spikes, but then overall, over the long period, they all lose out over Bitcoin. Whereas ETH, I think, has really done very well. So I trust it long term from a chart point of view. Also, fundamentally, I mean, you never know what, you never know what happens, right? So it's still a young market and it's still young. So that's why I would never really go only ETH or only BTC. I would have them both sort of in a very similar balance in the portfolio, a similar percentage, maybe a little bit more BTC, but then, someone who might want to enjoy the additional performance of ETH that's forecasted might put a bit more ETH in their portfolio. I leave it fairly balanced. But yeah, it's also something I'm interested in. Not necessarily, I mean, fundamentally, obviously, it's still the platform that most apps sort of are hosted on, right? And it's the most successful blockchain, I would say, with most apps or the apps, most other projects being built on. So yeah, it's certainly out there. And despite all efforts of other technologies or other altcoin projects, I think ETH has performed really well and doesn't seem to want to give up its second place behind Bitcoin.
Yeah, absolutely. And I agree with you also. I think if you look at the chart, it definitely shows that that potential there for outperformance. Now, obviously, anyone who's interested in your view can go to your channel, More Crypto Online, on YouTube, and you do regular videos there pretty much daily on the outlook for Bitcoin, Ethereum, many other altcoins. Could you break it down for us a little bit here in terms of, let's say, Bitcoin? Where do you see us right now in the cycle? Give us a little bit of the rundown of where you see Bitcoin moving in the next medium and then also longer term.
So longer term, I think Bitcoin is in a stable uptrend. I mean, if you really look at the chart, long-term multi-year chart, it's in a nice uptrend, and the current forecast shows that we might already be in the bull run. I mean, since November 22, Bitcoin's price has doubled basically. I mean, yeah, it's lost some of it again, but it has basically doubled in an environment in which interest rates increased. Yeah, so that's always interesting, because a lot of people say, okay, when interest rates increase, Bitcoin isn't going to go up, but actually it was the opposite way, especially between November last year and I think we had the peak in April or July. There was another peak. So, prices have certainly gone up despite an interest rate increasing environment, which I find interesting. So I think you can make the case that Bitcoin is in the bull run, even though in the early stages. I think a lot of people still call it bear market because it's a very uncertain environment. Yeah, and it's not absolutely evident that Bitcoin is in a bull run, but it doubled in price. So I mean, if that's not a bull run, I don't know. But then also a lot of altcoins are obviously losing. So it's not an environment in which altcoins are thriving at the moment. So I think that's why most people call it still bear market. And yeah, I mean, it's not, you can't say for sure that the bear market is over for Bitcoin, right? So it might still come down further. For me at the moment, and I have to say it's a very difficult market, but we had enough, let's say, uptrend patterns, enough impulse to the upside for me to say that as long as, I think it's the $18,800 level roughly, as long as that level is really holding, I would focus on higher for Bitcoin on the, let's say, on the daily time frame, and look potentially for reactions to the upside that could send us to 40 to 50,000 next. Now that might still be a few months off, but never say, a year-end rally could happen, and that could all happen, right? Oftentimes you get a weak September historically in the crypto sector, generally I think in the stock market as well, and then typically October, November are fairly strong months. If you look at the average for the last 12 years for crypto, look at seasonalities. If you want to bring that in as well, can be another factor. Then oftentimes there are year-end rallies, so it will be interesting to see if something like that happens again this year. It could certainly, be that sort of third wave rally that could take us to above 30,000. And problem was that the $30,000 or $31,000 level that we bounced off this year, we couldn't get above. That's very strong resistance. As soon as we get above that, I think the pathway to $40,000 and $50,000 is clear. And then overall, I think it's very uncertain at the moment, but I think the next couple of years will be very profitable in crypto, especially when we talk about Bitcoin, Ethereum. I think altcoins, very uncertain, because which project is really going to make it? I think a lot of projects are not going to, and a lot of charts are not going to go to new all-time highs again. Yeah, but they might still run. But I focus mainly on Bitcoin, Ethereum. So I think we are currently in the early stages of the bull run, but short term, I'm still focused on lower because we haven't seen any bottoming pattern that gives me confidence. So it could very well be, while we're looking for these bottoming patterns, if they don't show up, that we could sort of get back to a new bear market low. But I will only really focus on that primarily as soon as price goes below $18,800. Always have to change. We always have to change our view. I basically have a view on the daily time frame, which tells me where I think the daily trend is. But we're using the relevant support levels also to understand when the trend changes, and I'm using the smaller time frame wave counts to understand when we probably have bottomed. But if I don't see that, then my forecast will be further down. And if that doesn't show up before 18,800, then we might head to below 10,000. So it's still uncertain. It's certainly at the moment. If we talk about Bitcoin, I mean, I don't mind buying now, but only small bits as we go lower, sort of for my long-term portfolio. In terms of altcoins, I would not just blindly buy at the moment. I would just be watching them all the time if I was really trading altcoins. I don't see altcoins necessarily as, let's say, just buy and hold, because a lot of them can die, to be honest.
Absolutely. Now, it's interesting. You've mentioned the fact that, certain months are better or worse for Bitcoin. Of course, we are approaching the next halving. I think that's programmed around March, April of 24. Obviously, that's something that a lot of people look towards now, that halving cycle, the idea being that Bitcoin tends to rise, towards and kind of after the halving as well. How much of that do you introduce to your analysis in terms of, I guess you could call the fundamentals of Bitcoin, in terms of Bitcoin halving? And of course, there's a lot of other kind of cycle theories. Is that something that influences your decision, or are you very much purely focused on the Elliott wave counts?
Yeah, I think I observe it, I track it, and I mention it sometimes in my videos, and also we to the core community we have regular live streams, so I sometimes do topics on that, and we talk about that in more detail. But with regards to the halving, I mean, in my opinion, we haven't had really enough, you could say, data points to really come up with a reliable strategy that you say, okay, just because it happened in the past, it's going to happen again. That is speculative. But yeah, I mean, normally what happens is before the halving, like sort of now, you would normally get a last dip. That's what happened historically. So that could be this current correction, which we call a wave 2 correction, or I call it currently a wave 2 correction. Last time that happened, 2020, March 2020, where we had also a deep breakdown, very deep, obviously. But it didn't make a lower low. Yeah, it didn't make a new bear market low. So that's sort of my, if you want to say, theory. I mean, I'm not focusing on that really in the analysis, but it would fit together with the Elliott wave count at the moment, where we say we're currently, we had our impulsive moves to the upside to the 31,000 mark until April, July, so this year. And now we're coming down in a correction, and that could really be this dip, which could get quite deep, to be honest, before really the halving rally starts, maybe like the final shakeout of the weekends. I mean, that's just to align it with the halving cycle. But yeah, typically, I mean, normally you would say that, I think it's, I can't remember, sort of a year before the halving, things really start to, or 1.5 years, things start to move slowly into the direction of, further new all-time highs historically. And yeah, it started in November. So that's basically sort of a theory that you could say the new run to new all-time highs has started in November, but there is typically another major dip before that, not necessarily making a new low, could just be a higher low, and then yeah, we might rally, but I think it would still be a rocky road. I think it's the chart, it's just that environment, where also obviously liquidity constraints and things like that. I think it's not going to be an easy rally as we had it maybe in previous bull runs. I think it will be more difficult than many expect. And I think I've got a theory that I think for a lot of altcoins, a lot of people think, we got to get the alt season, right? As it always has been in the past. I'm not sure if we really get that again. I mean, yes, you will still see the rallies, but across all altcoins, I mean, do we really see that again? I think a lot of traders or investors or retail people, I think they've learned their lesson. I think a lot burned their portfolios, and a lot of people realize that a lot of these projects are, I mean, I'm not saying a lot of them are scam, but they are a lot of them are experimental, and they don't really, I mean, for a lot of people, it's like, it's funny, when you look back at what the sentiment was in the bull run, a lot of people said, okay, look, I'm going to invest in this project because, okay, they've got a Twitter page, they've got a website, and they've got a good use case. So that's it. And then people bought at the high, and I also made some wrong decisions there, but I typically exited, but some I'm just holding. But I kept, typically that's why I just buy small positions, when we talk about altcoins, and it doesn't really hurt when it then goes down. So that's how I manage risk with altcoins, or I stop out. But yeah, that's sort of, I don't think that sentiment is coming back easily. I'm not sure. Maybe for selected projects, but I'm very much questioning if we really will see that altcoin rally into the next bull run that really affects all altcoins. We'll see. I mean, but then we can still jump onto the train when we see the first setups. But that's sort of, I just think it will be a rocky road given the wider situation in the economy and liquidity constraints and everything, interest rates. Yeah.
Absolutely. Yeah. I mean, if we were to look at the previous cycle, it's possible we get that deep retracement. Obviously, that could be a very good opportunity to buy, right? If Bitcoin maybe went down to to about 20K, as long as maybe it doesn't break that resistance level you talked about before around the 18K level.
Yeah, but even then, I mean, for Bitcoin, I'm not even worried. I mean, even if we do that, I mean, for anybody, I mean, maybe that would then be the last flush, you know, the last real breakdown, capitulation, and then, I mean, if we get another low, I mean, that should be the last one, and then maybe, I mean, at least then the next bull run should probably start. But that's why I think tactically or strategically, it's very wise to, at the moment when I buy, I really keep positions small. I mean, I buy sometimes Bitcoin $100, you know, $150, just sort of while it goes down on a red day. And then sometimes, you know, when it goes up, suddenly I just take some profits, sort of very casual, but I keep a lot of the cash flow available, a lot of cash basically as part of my portfolio for potential of, you know, those lower prices, because even though in the analysis I don't primarily expect it, you know, it's all probabilities, right? And it can very well, the trend is currently down. So the local trend is down at least. And that can of course change the larger trend. So I'm very much watching that. And my strategy is either waiting for a real bottoming pattern and then trading aggressively on the long side, or just buying slowly on the way down to increase my long-term portfolio BTC position, but then keeping cash available for really a last crash. I mean, I bought quite a bit in November last year when FTX collapsed. I hold cash for those opportunities, and I always mention that in the community when I do it. And that was the low, you know, and that's why I learned that from previous bear markets. When you don't hold enough cash to be able to capitalize on those opportunities, you just can't. And they make the best trades, really.
Right, yeah. Now, you mentioned seeing a bottoming pattern. What exactly does that mean to you? What exactly would you qualify as a bottoming pattern that would give you high confidence of a reversal of the bottom being in place?
Yeah, so when I'm tracking the downtrend now, the local downtrend, I'm tracking also with the use. I mean, I use the, let's say, smaller Elliott wave degree structures to understand where I need to put my resistance level with Fibonacci levels. So that's very important. You typically combine Elliott wave and Fibonacci. You can use Fibonacci without Elliott wave, but you can't really use Elliott wave with without Fibonacci. And I basically track Fibonacci resistance, and as I said, you get an idea that an uptrend is starting when you have a first 5-wave move to the upside. Now, you can get a 5-wave move to the upside on a very small time frame, 5-minute chart. That's not going to be large enough to indicate that the trend is going back to the upside. So what I'm watching for is first 5-wave move, so first impulse in an ideal world. So again, that's just Elliott wave language, but a first 5-wave move up that I can trust, that breaks above that resistance. And yeah, then the price would probably have moved, I don't know, maybe 5%, I don't know, 10% or something. So it takes some patience. But that's exactly why I accumulate on the way down as well, slowly, spot positions. But I want to see that 5-wave move to get confidence. And then that's not going to be enough. That's only the first confirmation. It needs to be above resistance. And then the pullback afterwards, because there will always be a pullback correction. If that is a so-called 3-wave structure, we call them ABC structures, they can take other forms, and it's holding a higher low, so there will be a support level that I can identify after that rally. And if that's holding that support, which is again at Fibonacci level, yeah, that's the bottoming pattern that I would use then as well for a trade setup, because it would be a pullback trade, trading, basically buying support, where I can also set a tight stop loss. So it takes a bit of patience to wait for it, but that's the waiting for that, for example, in the last few weeks has, I hope, saved a lot of my viewers from making wrong decisions, because we had a few rallies, but I always emphasize we haven't got a bottoming pattern. We need to wait for those 5 waves. And a lot of those rallies, or all of them, were just 3-wave rallies. So they did not sustain, right? They broke down again. For example, we had that news event about the what is the grayscale ETF, I think, where there was a rally and it broke down again. But we were tracking potential 5-wave move, but I highlighted, look, we cannot confirm that a low is in place until we get those 5 waves. And yeah, it takes patience to wait for it, and it frustrates a lot of people because it's always the same process. But without that process, I would have called a lot of wrong bottoms probably, you know, and a lot of people would jump onto a trade, or I don't know. I mean, I never tell people what to do because everybody should have their own strategy. But obviously, when the analysis says we might have bottomed, people might make the wrong decisions. So I'm very cautious. I always like to wait for the evidence in the chart.
Yeah, that makes a lot of sense. Now, we've talked a bit about the altcoins. You have mentioned that you got in quite early in Cardano. You have perhaps a good position there. I've also been invested in Cardano. I'm looking at the chart though, and as of late, I would say it hasn't done very well. What are
No,
your thoughts on Cardano right now?
yeah, it hasn't done very well, and I think so. My forecast at least shows that it's currently moving in very. It's just been moving sideways, really. Obviously, it's still volatile, so it's getting less volatile now these days. But it has been very volatile around December, January. But that volatility has reduced, so it seems to be moving in some kind of a triangle, which suggests another bear market low for ADA. So it's quite interesting that Bitcoin obviously in this, yeah, you could say bear market, or currently at least this year, Bitcoin outperformed a lot of altcoins. A lot of altcoins, when Bitcoin is coming down, they drop much more, but they didn't really recover with Bitcoin a lot. There are only a few altcoins, I think, that are currently in a, let's say, potential position from where at least a third wave rally could start together with Bitcoin. A lot of the other altcoins have already made new bear market lows and would need to build a bottoming structure from scratch, which then again just adds uncertainty. So for ADA, the trend is still down, in my opinion. I think we might, again, it's a moving target. At the moment, I'm watching sort of the 15-cent level as potential next target to the downside.
Right.
But hopefully for the next, I mean, long term, it's still a decent chart, I think. But again, it's just an altcoin, as many others as well. But if it can rally to a new all-time high in the next bull run, which I mean, it certainly at the moment still can from the chart point of view, it should sort of reach at the minimum $4.50. That's sort of at least from what we can see now is a projection for the bull run.
Interesting. How exactly would you project targets based on these higher timeframes? Because would you be using the logarithmic chart for that, for example?
Yeah, it's interesting. So normally I use for the long-term chart the logarithmic chart. It is, however, these logarithmic charts, when you really project targets for altcoins, I mean, they show you really very distant targets because of the volatility in the altcoin sector. So I use a mix between log and linear chart or arithmetic chart. Mainly for long-term charts, I use the log chart, but for projecting upside targets, I like to use, actually, because it's proven very reliable for third wave rallies, I like to use the linear chart to project a target for a third wave, which would be the next all-time high rally for ADA. And yeah, I would use typically the area, the minimum is the 1.618 Fibonacci extension. I mean, there might be, I mean, on the log chart, you would just use a lower extension level for the next all-time high then. But if you really go with a 1.618 extension on the log chart for an altcoin, it provides, in my opinion, unrealistic targets. For Bitcoin, I think they've always worked, but it takes time to get there. I think the linear chart, at least in terms of upside targets, I found it quite reliable, to be honest. So for a third wave rally, I would measure the length of the wave one to the bottom of the wave two, and then you typically are looking for the area around, well, the 1.618 extension is the minimum, but they can always extend higher. The normal mindset that needs to happen, or you need to adopt the mindset in a third wave rally that the extensions will always happen, right? Because otherwise you exit too early. So you just move up your stop loss continuously.
Yeah, absolutely. That makes a lot of sense, and it's kind of the same conclusion I reached. Because, like you said, I mean, hey, you know, if those logarithmic targets get reached, you know, all the better. But you know, I mean, I'd still be quite happy. I mean, if ADA reaches $4, you know, I'd already be quite happy. So I would.
And I mean exactly, and that's really just the minimum target it should do. I mean, it should ideally go higher. That would only be the third wave. Then you get a fourth wave correction and another high in a fifth wave. So I might go to $10, but that's very, you know, I try to avoid those bullish projections currently in the bear market because we haven't even bottomed, and then people get disappointed.
Right, absolutely. Now, you said before that you actually got started trading stocks and stuff like that. Do you trade stocks right now? What is your current view of the market?
Yeah, the stock market is very mixed at the moment. So But we obviously have a second channel. I'm not sure if you aware, more trading online. So I analyze some stocks, gold, silver, and as well. So I try to have a broad overview of different markets as well, even though not as intensely as the crypto market, which I live and breathe at the moment. But yeah, with regards to stocks, I think the situation is, I mean, I'm also looking at the S&P 500, and I track it sort of in parallel as well. So I find it quite important. There's generally sort of an idea of the sentiment in the market, and I've been tracking it for many years as well, and for many years since I really started to get involved with Elliott Wave. I think it's really at a point that is one of the most difficult. It's one of the most difficult markets I think I've seen in the last 10 years, you could say, because it's at a major decision point. The S&P is big uncertainty. I think it can go potentially in a year-end rally maybe to a new all-time high, but it's at a critical decision point. I mean, I'm tracking, can't remember what the support level is, but if we get we seem to be coming down now a little bit. So if we come down too deep now, and there's a certain support level, can't remember what it is, 4,000 something points. If it goes below that, in a 5-wave move, we might get quite a bit of a crash actually, of maybe even 40%, 50%. I'm not sure if it will go down that much, but it would be quite a substantial, probably several year-long dip, to be honest, or crash, you could say. And that will probably affect a lot of the stocks as well. So I'm really watching that at the moment. I'm very neutral about it, because while the short-term trend is still up, I would still focus on higher at the moment, also from how I see the market. And I think there is a decent potential to reach an all-time high. But even after that, maybe reaching 5,500 points or so, even after that, we should see a decent correction. But that would probably then not start until maybe end of next year, 2025. So that's at least what the chart suggests at the moment. I mean, that can always stretch out. You can get extensions to the upside. But there's obviously a key decision point that we're approaching, and we're getting there, I think, maybe in the next couple of months or so. So I'm tracking that. It's not very clear at the moment. We're not clearly in an uptrend. It was the S&P, for example, was in a nice uptrend since also October last year. So it was quite nice. But now we have sort of maybe exhausted that, because it's also looking at Elliott waves. We've moved up in 3 waves now. So that's always when a chart can break down. So it's quite interesting. But there are some stocks which are performing quite well at the moment. I'm currently observing Tesla, for example. I find it quite interesting. It could still move higher, but obviously I'm watching very much these support levels. So I'm trading Tesla in parallel. I'm trading Coinbase. But yeah, I'm focusing a lot on the analysis these days. So I'm not doing intraday trading or so, but I use my own analysis for sort of swing trades, that maybe last a few weeks. I'm currently observing the Teladoc is one company that I'm watching, where I'm watching the chart, PayPal as well. They're all still, I think, sort of in a downtrend at the moment. Tesla might have started an uptrend already. But a lot of coins, a lot of stocks are still in a downtrend, but approaching key levels like Teladoc, like Square is one, or Block that I'm observing. PayPal, where I'm just waiting for the right entry point. There's some good interesting opportunities out there at the moment. Watching the cannabis sector as well, which is highly speculative, but they had some good runs.
It's been doing well, yeah.
Yeah. So yeah, I'm watching different markets. I'm sort of trading here and there as well when I see the opportunity, but not like intraday or something. More like swing trades that last a few weeks.
Right. Yeah. Yeah, it's kind of interesting. A bit like a lot of similarities in the market, I would say, to crypto. Now you've had some of the main stocks, obviously the Magnificent Seven going up, like Tesla. Then some of the out stocks, let's say, maybe not doing so well. Still put in that bear market territory. But you talk about a 30-40% correction. So would that take us below would you expect that to take us below the lows of the October, about 3,500, or?
Yeah, it could do. So it would be, so I know we don't have the chart in front of us, but the October low I'm currently counting basically as a wave 4. So it would be, from a bullish point of view, a wave 4 would have finished there. So that means we're now in a wave 5 to the upside, could get to a new all-time high. But it could be, because we only rallied currently in 3 waves, that the wave 4 was never finished. It was only the first wave of that wave 4 to the downside. we're now moving up in the corrective B wave. And we're going to come down in the last wave, which is going to be potentially impulsive to the downside, taking out that low. So that's the risk at the moment in the market, because it's just that decision point. I'm fairly neutral about it, and to be honest, from a risk management point of view, it might make sense to expect it, because even if we are holding support and we go higher, the projections show that, I mean, yeah, we are going to make probably a new all-time high, but it is sort of the last bit of the rally, okay? But the downside is much greater. So the downside potential is quite high actually at the moment.
Right. Yeah, I'm definitely tracking a similar account where we could get to those all-time highs and then start a more kind of a longer bear market. Do you see any chance of like kind of divergence between stocks and crypto, where stocks kind of enter a longer bear market, but crypto manages, or at least Bitcoin maybe, to keep performing a bit better, or do you still see that correlation holding?
Yeah, I mean, I'm not too much, as for most Elliott wave analysts, I'm not too much in correlations, because they seem to break. There are correlations, absolutely, but they come and go. And I recently made a chart for myself. I tracked the correlation between Bitcoin and the S&P 500, and you have periods where they are positively correlated, and then periods that are also quite long where they are negatively correlated. So you basically all the time have to track, okay, when are we positively and when negatively correlated. So there is not really, you can't say that it's always that they always move together. Now a lot of markets started to correlate with each other after the 2020 crash. That can stop at some point, right? So yeah, absolutely, I see the potential that this could happen. I'm very much just watching the charts individually. You never know what the fundamental reason, you could say, might be for that. There could be something that, I don't know, affects the financial sector or something that causes maybe even a black swan event. I mean, you can never predict them, right? But that might cause the S&P to come down quite deep, and maybe crypto will hold quite well. I don't know, so best to focus on the charts individually. But yeah, I definitely see the possibility that they might diverge from each other. Yeah, because they have done in the past. I mean, the data is there. It's just that a lot of people just, I don't know, they just track the correlations, whereas there are also periods where they haven't been correlated really. And to be honest, getting maybe into a recession, it's sort of Bitcoin's first recession as well. We don't really know how Bitcoin behaves and in a recession, so it's going to be very interesting.
Yeah, absolutely. Interesting point there for the markets for sure. And in terms of Outcoin, you've mentioned that a lot of them don't look great, but perhaps some of them could start rallying with Bitcoin. What are the maybe 2 or 3 good setups in Outcoins that you'd like to share with us?
I think most altcoin setups at the moment, they are actually on the short side probably. I mean, most altcoins, I can tell you, they are not really looking good. Some had potential after the June lows, but they were not high confidence setups to the upside. So I think there are really only, I mean, Solana is probably, from all coins that I'm tracking at the moment, the one that looks, Solana, maybe Matic, potentially BNB, but that comes with some problems as well. I think they are all not really where I would say we've got a high quality setup here, but I think they are, of all the ones that I track, probably the best ones. So Matic, BNB, and Solana at the moment, at least, I mean, they haven't confirmed that they have bottomed, but they are coming down quite deep, and the long-term charts still look okay, and they have a potential that they soon are going to complete their correction. There are some very short-term setup. I mean, Aave currently is one that I'm tracking that could move directly up from here, but I have no trust it's going to do that. So that's probably going to break. And then there are some which I find quite interesting that still have a little bit more downside to do, but they showed an initial impulse. So I'm tracking LDO is one, LDO, and LDO and Veracity. But they are, even though they are at the moment, I would say decent long trade setups, they haven't confirmed that a low is in play. So I think they are still set to go lower at the moment. But there's a certain breaking point, which I highlight in my videos, which will be different for each coin. So it's and with the current market condition, obviously it's very speculative. So most coins I'm tracking, I'm tracking the resistances for potential short trade setups, to be honest, at the moment. But even now, I mean, they've come down now since, I mean, middle of July, we had, I think, the last high. So the coins have been correcting now for a couple of months. I think we're getting to the point where a lot of them are oversold. So we are probably going to see in the, maybe even as a year-end rally, some potential upside across the sector. Yeah.
Yeah, absolutely. Most of the setups probably to the short side. I would agree with you on Solana there, having probably a nice setup. You know, Solana is one that I kind of hate to love, but you know, it's had some issues in the past. You know, as a project, like I say, it's very centralized. I find this, but you know, still people seem to like it. You know, they had that partnership, I believe, with Shopify and USDC. So, you know, the chart looks kind of decent, right? So maybe it's an opportunity there.
Yeah, absolutely. Yeah.
I mean, I don't see why they couldn't do all this stuff on Cardano, right?
Yeah, and that's the problem with the the use case and everything, because there are just too many projects. There are just too many projects, and you don't know which one is going to make it. So for me, the approach with altcoins is literally just for swing trading. I mean, maybe that has changed over the years, because otherwise I probably wouldn't have held ADA. I mean, I took profits in the bull run, but we probably could have sold everything. But yeah, I guess for me it's more like, no fundamentals out there, no use case or tokenomics, how they call it, has protected any coin from the bear market. That's fact. And despite this is the best use case, and this coin is going to make it, and here low inflation or deflationary altcoin or tokenomics, but none of that has protected any coin from the bear market. So yeah, it's always very questionable, the fundamentals in the altcoin sector. I think it's not proven. It's very, very new. So we don't really know what we can really focus on for our fundamental analysis, which is why I think technical analysis for cryptos is, I think, the best choice.
Yeah, absolutely. That makes a lot of sense. And in terms of gaining exposure to crypto, how do you feel about something like Grayscale Bitcoin Trust? Would you advise buying that, or are you much more of a not your keys, not your coins, cold storage kind of guy?
Yeah, I think I pretty much am. I mean, it might be useful sort of as something that is easy to trade. You can just do it from a normal brokerage account, I think, just to get some exposure for some people, maybe, because it's easy to get some exposure. Well, I don't trade these. I also don't follow the charts. I think we've got GPTC, Bido. But yeah, these ETFs or funds. Yeah, I mean, I'm not trading the charts. They can be at a premium or discount versus Bitcoin. So obviously that's something for traders to track. But I mean, it can be useful for anybody who might not, because not everybody is into, I buy Bitcoin, I buy a hardware wallet, and I want to get into the tech. So I think that's the main advantage, that especially if we get a spot ETF approved, it might get quite interesting for some people to get some exposure through their normal brokerage account, not really crypto exchange account, because then you have to deal with, okay, where do I store my coins? Okay, I have to get a hardware wallet. How does that work? But yeah, I think it's sort of for those people, and that's okay, because I understand that not everybody wants to get into that tech stuff. It can be quite overwhelming if you need to get a hardware wallet. You've got your key, you need to write that down, you need to store it safely. So that's not for everybody. And I think it prevents a lot of people from getting into crypto. And I would also not just keep my coins on an exchange, because we all know what happened with a lot of exchanges out there, including FTX.
Absolutely.
So they can be hacked. You can lose your access, and all sorts of stuff can happen. So yeah, and not everybody, I'm very much a fan of diversifying. So having maybe not even only one hardware wallet, maybe a couple or three, and put it on different ones. And because you might lose one, I don't know, and then everything is gone. And also having different exchange accounts, I like that, because I like to be flexible. But that's not for everybody. So not everybody might want to get into that. So yeah, I think exactly for that purpose, I think these are very useful to get the wider population maybe, and get acceptance for crypto out there. And they are regulated as well. At least I guess they will be, especially if it's they have to be approved by the SEC. They would be regulated, and that would also have some positive impact, because then some organizations might get into crypto that haven't done that yet.
Right, of course, that makes a lot of sense. And now, for anyone getting started in crypto, maybe someone who is kind of new to trading in crypto, what advice would you give them, and maybe what sort of resources would you direct them to? How does someone say, okay, I'm very interested in this crypto and trading? Where do people get started on this?
I mean, they could just join a community. I mean, they need to start somewhere. I mean, I would really recommend. Obviously, there's a bit of work required. I mean, at the moment in the bear markets, to be honest, getting some exposure to crypto, the risk is probably quite low because as I said, you can just put some pocket money into some project, and maybe in the bull run, they will get you some car money or something, right? So you can get a lot with little. The question is, where do you start? So yeah, it's probably about diversifying, I think, in a few altcoins. But then again, I wouldn't typically recommend, or I don't see altcoins as investments vehicle necessarily, but more for trading. But then, they could follow certain setups. Doesn't need to be on my channel, it could be anywhere else. There are enough people out there who track these projects. But yeah, getting some exposure. And again, if you just buy a little bit of an altcoin, it's also risk management, right? So the key is not to go all in with a 10x leverage, or even worse, higher leverage, to think you can get rich overnight, which might happen if you're lucky, but most likely it won't, and you will blow up your portfolio. So I think it's about getting an exchange account or two, maybe Coinbase or another exchange that can be trusted. Now, I wouldn't say you trust an exchange, because you always have to be skeptical with these crypto exchanges, but go to the reputable ones, open an account, get some exposure, get a hardware wallet, and yeah, put something on there for the next bull run, I think, to get some exposure, especially Bitcoin, Ethereum, I personally would do, and maybe a few selected altcoins with a little bit of money. Now, how much that is, everybody has to decide for themselves. And then, yeah, get some education. Now, where do you get that? Obviously, there's plenty of stuff on YouTube. Yeah, I mean, I don't use typically. I don't. I mean, there isn't really a page or website I would recommend. I mean, we offer a lot of education in the community, but everybody can decide which community they want to join. I generally think a community helps because you are among others. But pick your community wisely. You don't want a community where people are shilling coins or creating panic. So, and I think the community needs to give a lot of education, because you as a beginner, you want to understand, okay, how does risk management work? How do I set up my hardware wallet? What hardware wallet do I pick? You want to have helpful people. And I mean, you can Google all of that stuff, or you watch a lot of YouTube videos, but yeah, important is to get some understanding of the space and maybe get some initial exposure. Just getting an initial position. If anybody wants to get into the crypto market now, it's probably the best time, to be honest. But the problem is, a lot of people will not do that. They will wait until Bitcoin is close to a new all-time high, and then we'll get all the messages. Is it too late now to buy? And right. Yeah, it's gonna be a little late.
Yeah, absolutely. That makes a lot of sense. Just get started somehow, and probably set your expectations right, like you say. Don't manage risk and don't expect to become a millionaire overnight.
Yeah, exactly. Because obviously, if you expect big profits, that comes with big risk. And I always say that the main priority should be, especially if you're now coming into crypto, chances are you've probably you don't have experience with, I guess, investing or trading. So the preservation of your capital needs to be the priority. And then if you can do that by managing risk properly, then the profits should come automatically.
Absolutely. So where can we send people on the internet to find you?
So yeah, I guess they can just watch our YouTube channel to find us on YouTube. More Crypto Online should show up quite quickly. Website is morecryptoonline.com, and More Crypto Online on Twitter. But there are a lot of fake accounts where you find the proper account on the website, and it's also linked on the YouTube channel.
Awesome. Well, thank you very much for taking the time to come on the show. Like I said before, I've been a big fan of your work, and you do plenty of it. And thanks for coming on, and I hope we can do this again sometime.
Perfect. Yeah, absolutely. Thanks for the opportunity. Great. Thank you very much.
All right. Bye-bye.
Bye.
Thank you once again for listening to The Pragmatic Investor. If you're still around, I take it you enjoy the content, so you might enjoy subscribing to my free newsletter. You can find me on Substack, jamesfordsubstack.com, or you can simply type in The Pragmatic Investor. I do a free weekly newsletter where I discuss macro and various types of alternative investments. You can of course also find me on YouTube, The Pragmatic Investor, and also on Seeking Alpha, The Pragmatic Investor.